from the library. Thank you so much, everyone, for joining us. We've had a great turnout tonight. Also, just like to thank the library for hosting us this evening. They've done a great job in handling a lot of logistics to make it a success tonight. So, you will have seen a bit of background about me. I'm an investor, entrepreneur, and board advisor. And tonight I'm going to be talking about 3 topics, just to begin. So, give a little bit of background on myself and why I wanted to speak tonight and why I thought it would be helpful for you. Talk a bit about the trends in the tech, in fintech, and then I'll talk about what's happening on the fundraising scene. So, but before I dive into all that, I always like to get to know the audience. So, just by a quick show of hands, how many entrepreneurs do we have in the audience? All right, that's pretty good job. How many investors? All right. You guys are going to be bombarded at the end of the show from you set. And then advisors. Other advisors? Okay. And everybody else is a tech fan? Okay. One other quick poll, just curious. How many of you are from the UK, based in the UK? Anybody visiting and from based somewhere else? Where are you based, sir?
Dublin.
Dublin, okay. Well, great. Okay, so we know who we have in the room today. So, so I'll say a little bit about kind of why I'm here. So I've been fortunate enough over the years to have worked with and or invested in a number of different fintech companies. And so I thought my perspective might be a useful complement to some of the other speakers tonight. So I invested in PayPal and JP Morgan. JP Morgan not a startup, but they do a lot of investment in fintech. And I've worked with companies like Barclays on their financial inclusion initiative, where they were helping extend mobile banking for the underbanked populations. And then I've been pleased to have been able to see the pitches of some of these leading startups, including Risk, who's here tonight, companies like Moneybox and Everledger and others who are getting a lot of kind of momentum these days. So, but enough about me. So, what do we mean by fintech? We're all here tonight to talk about fintech. What do we actually mean by fintech? Does anybody anyone want to take a shot at kind of a definition of fintech? What do we mean by fintech? Don't all chime in at once, but anyway, feel free. No? All right, well. No. Anyone?
Financial technology.
Financial, okay, that's the definition of the term, yeah. So what do we mean by that? What does it cover?
Making finance products work for the user better and breaking the mold of traditional banks.
Okay, making banking products work better for the user and breaking the traditional mold of banks. That's definitely a huge part of it. There's a lot more to it. I won't bore you all with Q&A, but it's actually a pretty complex landscape. Doesn't matter that that's a little bit of an eye chart, but it covers everything from robo-advisors and personal finance, so Nutmeg is really hot now. You've got, obviously, blockchain, cryptocurrencies, insurtechs, which we're going to be hearing more from. You've got regtechs, which I'll talk a bit more about. A lot of digital and challenger banks who have been attracting a huge amount of funding, which I'll tell you about in a minute. Alternative finance and payments and remittances. So the headline here is it's a really broad and diverse ecosystem. There are a lot of drivers for why it's, let's get the headline here. The sector has attracted $100 billion worth of investment since 2010. And there are a number of drivers and reasons for that. So one is in 2008 with the credit crunch, it became very apparent that there was a real need for alternative methods of financing when credit supplies dried up and the traditional banking model didn't seem to be working. There's also, in the same year, in 2008, we had blockchain was invented, and then you had, shortly after that time, over the next few years, you had a government, at least in the UK, that was open-minded about increasing competition in the finance industry. And then you had the kind of N squared, which I talk about, is mobile telephones, the penetration of that across markets, which basically act as a platform for the democratization of finance, basically with so many sorts of payments and wealth management and other applications on mobile. So that was an ideal platform. That was a mega trend that fintech goes into. And then the last M is millennials, many of whom are digital natives, and they feel that they don't really see much of a difference in the basic banking requirements that they can get from an online bank versus a brick and mortar bank. So they're happy to be earlier adopters of those kinds of services. So that's kind of what's behind this. So you may also hear a lot about blockchain. And so Ian's going to talk about that in detail, but I just wanted to throw an anecdote out there. So in the last year, there have been several companies, publicly traded companies, that simply changed their name to include the word blockchain. So in the US, there was a company called Long Island Iced Tea, makes drinks for years. They just changed their name to the Long Island Blockchain Company. The share price tripled within days. And there were several other companies where the same thing happened. That seems mad. Why would that be the case? Well, if you understand how essentially pivotal blockchain could be, you can see why any of these companies that hint that they're making a move into that space immediately become much more attractive to investors who may have money to deploy somewhere. So just a quick story. I forgot to put my timer on. Where are we on time now? Apologies, I forgot to put my timer on. Anyone? No? They'll tell me when I have 10 minutes left. So just a quick story about why do people care about blockchain? Just kind of to set Ian up maybe. So if you go back to the 2008 financial crisis, so let's talk about what blockchain is. It's basically a distributed ledger of transactions, and it's created in such a way that it's transparent and secure. So essentially what the Bitcoin blockchain is now is a record of every transaction that's taken place with Bitcoin over the years. Okay, you say, so what, big deal? Well, it's a big deal because one of the causes of the financial crisis was that the banks had been trading with each other. There were a lot of mortgages that were pooled together, sliced up, bundled together, and sold off to other business partners, other banks. And then that happened over and over. It got to such a point that everyone was sitting around, if the banks were sitting around a poker table, nobody knew what hand they had or what hand other people had. So therefore they said, well, we don't even know what our exposure is to these toxic loans because we only have a piece of several hundred of them. We don't even know which ones they are. That's the first thing. And we don't know how trustworthy our counterparties are either because we can't see their books. So if those transactions have been taking place through a Bitcoin-enabled ledger, then everyone would have had the same view on the balance and assets of all the banks that were at the table, and they would have had a sense of the actual creditworthiness of each of the securities they were working with. So what that means is we may not, instead of all the banks pulling up the drawbridge and saying, actually, we don't even know what our own exposure is, we better hold on to our capital, and we sure as heck don't want to trade with you because we don't know if you'll be able to pay back the loan. That seized up the entire world economy. Now, what I'm suggesting is that if that sort of complex system could be run through a blockchain-like ledger, that wouldn't have that problem. Oversimplification, just to give you a sense of why it's so important, why people care about it, you can essentially prevent catastrophes like that. It's worth looking into. So, pause there. So that's, we have a sense of Bitcoin. FinTech is very broad and it's been growing. It's attracted, as I said, $100 billion worth of investment. Okay, you're probably familiar with many of these companies, PayPal, Tide, Stripe. You hear a lot of these names, a funding circle. So those are kind of the first generation of FinTechs. So what's actually happening in the industry now? So we consider kind of modern FinTech to be everything from 2008 and afterwards. So on the right-hand side of this chart, you have this nice bell curve that shows all the FinTech company formations by year from 2008 down to the end of 2017. And this is within banking and capital markets, so payments and financial management segment of FinTech. You can see that a lot of them started out in 2008, peaked around 2012, and then since then there have been fewer companies starting up in that area every year globally. While at the same time, if you look at the second chart, which is acquisitions every year, you can see that these are really started ramping up in the last 4 or 5 years. So this FinTech, believe it or not, is actually maturing as an industry. The first generation of FinTech is maturing. So the early founders have either scaled, many of them being acquired. So at least in that area of FinTech banking and capital markets, you're not seeing as many startups every year. So it would make you wonder, well, where's all that money going? It's still attracting a lot of investment. Last year in the UK, FinTech attracted 1.3 billion. Globally, it attracted over $27 billion worth of investment. So the money's going somewhere. Well, where is it coming? So we're seeing the rise of next-gen FinTech. So whereas first generation FinTech, as we touched on before, was based on, so first generation FinTech, the poster child for it is Bitcoin. And if you really want to understand Bitcoin, you need to understand blockchain, which is, Bitcoin is the first use case of blockchain. And then if you want to understand blockchain, you need to look into cryptography, which maybe Ian will touch on. So we had blockchain, then we had the first set of startups really targeted low-hanging fruit. They were leveraging things like mobile penetration to put services on that as a platform of service. They were leveraging the move to cloud computing to make basic services more efficient and effective. They were focusing on things like deposits and lending and financial management, solving those worthy problems. The next generation of fintech is going to look to tackle more complex challenges. So that's things like financial crime and fraud, keeping companies compliant with regulations. And something that's happened recently is InsurTech has really come into its own. It attracted a 20-fold increase in investment in the UK last year. In the previous year, it had £19 million worth of investment. This past year, it had close to £400 million of investment. So it's really absolutely exploded because they've gotten to the point where the first proof of concept use cases they've already developed. Now they're ready. Now a lot of the companies are looking to innovate. So what we're seeing, where we're seeing the growth is in InsurTech, RegTech, applying artificial intelligence to really improve the efficiency and effectiveness of services, but also to really kind of leapfrog, and we'll talk about that later. And then we're seeing a huge rise in new challenger banks. Of that 1.3 billion pounds of investment into UK fintech, half of that went into just a handful of challenger banks and TransferWise. So they've really taken the lion's share of the investment. And then we're seeing more big tech participation. So the financial services players are partnering with the likes of IBM and other players to really make the most of the opportunity. So one other takeaway from this is maybe marketing back to the other blockchain story about why does blockchain matter, because it builds transparency and security into what is currently a fragmented set of transactions disparate across space. So then it's no surprise that 77% of financial services companies said that they plan on using blockchain processes by 2020. So that's going to happen, as much as you can predict anything. So let me pause there. I want to see if there are any questions from the audience. I'm conscious I've been talking quite a lot. I wanted to get a bit more engagement along the way. I'm going to segue into the second piece of the talk, which is around a bit more detail on fundraising. But yeah, yes, sir.
You talk about investment bank. If they use blockchain, then the problem wouldn't happen. But do you see, investment banking operation, let's say A.M, M&A, it's all private. They wouldn't want to expose this, and the customer wouldn't go to the investment bank to expose this. And do you see, why you said that, about blockchain, using blockchain as a solution for investment banking?
So yeah, sorry, I can repeat the question. So you can repeat it, but you want to repeat it?
It's okay.
Okay. So the gentleman was asking about, with the blockchain example I gave, there's a lot of confidential information that investment banks work with, like during mergers and acquisitions and things. Do I expect that those firms will use blockchain for that? No. And it was kind of a deliberately provocative example and oversimplification, saying that I think that's not even second generation blockchain, that's probably down the road blockchain to be able to handle that level of complexity. But just to show the potential, because why the market seized up was largely because nobody knew their own exposure, nor the exposure of their counterparties, which is a real situation. But yeah, really good question. I'm just trying to stir the pot a bit, maybe get an answer. Yes, sir.
So I got a question regards to about first generation, and obviously they've been coming through a bit more maturity.
Sorry, Leo.
That's all right. Do you see any commonality? Do you see any commonality in terms of the organisations that were most successful? The organisations that were most successful, and therefore the traits and characteristics that would affect the next generation that are coming through that you think will be important for them to be successful?
So what should the next gen learn from the first gen?
Yeah, broad spectrum, as you said at the start. But what are the key characteristics of the ones that have been really successful and will play into the next generation?
Yeah, I think that's a great segue for the next part of the talk, which is Startup Fundraising 101. So I'll just talk through, picking up on your point, I think, tangentially. So we talked about how much money has gone into fintech, and obviously a lot of startups in this room. How many people in the room have already have done fundraising for their company? How many of the startups? Okay. How many intend to do some fundraising at some point? Okay, this part of the talk is for you. So how do you become one of those successful companies that attracts maybe a few million in the beginning and then 200 million at the end? So just some striking statistics, and I won't highlight the fact that when you first start a business, I won't highlight the fact that Elon Musk says when you start a business, running a business is like eating glass and staring into the abyss, because you have to do a lot of things you don't like to keep the business running, and the business could go under at any time, sometimes if someone doesn't pay, for example. So you want to climb this curve and get as much funding as you can. I've got 5 minutes left, so I need to pick up the case. So basically, the advice I would give to startups, me as an investor, what I look for, I see hundreds of pitches a year. I call it my 5+1 model. It's pretty simple. If you want to climb this curve, you have to make sure you have at least these 5 principles in mind. First thing is about your team. I'll tell you the 5, the team. So about the team, basically, many investors will not invest if you only have one founder. If you have 2 co-founders, it usually helps. Then isn't the right team to execute the plan that this business actually has in mind? If you plan on expanding internationally, but no one on your team has ever done sales outside of the UK, that's a flag. So, and or if you have similarly, if you have a founder on your team who's led us has led a successful exit at a 100x multiple, you're going to be sitting pretty in terms of raising some money next time around. So that's the team. Second thing is the big idea, which is many people put first, but big idea, how differentiated is it? And how will the world be different after this business exists? Okay. The third piece of the puzzle is what sort of traction have you got? What can you demonstrate in terms of the product proof of concept? Does the product work? And commercial proof of concept, does anyone want to buy it? And that really becomes more important as you begin to climb the curve. The fourth thing, you need to build all of these things into your narrative, by the way, from the beginning. So the fourth part is how will you scale the business and how will you protect it while you scale it? What sort of intellectual property do you have? What sort of commercial partnerships are you going to have? How are you going to protect the investment that the investors put into the business while you're growing, to simplify? Then the fifth thing is the all-important exit, which is when, what sort of exit, and at what sort of multiple. Are you thinking of a trade sale? Are you thinking of being acquired by private equity? And what have comparable businesses been bought for in the past? So those are just some points. I'm going to flick through this pretty quickly because just the point I'm going to mention is that $100 billion that's been raised since 2010 has largely gone to 3 or 4 countries. So you can see on the x-axis is the number of fintech companies in the country, and the y-axis is the amount of investment. So you can see the U.S. far and away has many more fintech startups, but yet China and India have invested almost the same amount. So the U.S. has about 250 startups. China has less than a dozen in fintech. Big ones. So the investment is much more concentrated. And the UK is ranked in the top 3 for banking operations, lending, capital raising, everything except for payments, simply because they've been outspent by China and India. So moving on really quickly to the UK. So as I mentioned before, the UK, fintech investment in the UK more than doubled last year. And you can see, this is fintech in yellow, it's even outpaced artificial intelligence more recently, which was the buzzword for a long time. And actually these two interact anyway. Artificial intelligence enables fintech. So we just talked about that. So just moving on real quick. Just to wrap up, let's talk about unicorns for a minute. So just a quick question. Anyone know how many unicorns there are in Europe? No? 35. How many of those, if you count Europe, if you count the UK and Europe, which it is at the moment, how many of those are in the UK? Anyone want to guess?
None.
There's no buzzer? None? Okay, that's a good question. So there are 13 tech unicorns in the UK, of which 4 are fintech. We normally do this interactively, but there's Funding Circle, Revolution, Oak North, and then there was TransferWise is the only one that's not a challenger bank. So there's TransferWise and the 3 challenger banks are the ones that have really reached unicorn status in terms of having $1 billion valuation for a private company. So we need to wrap up, but I wasn't going to leave time for questions. Do you have time for questions? 2 minutes for questions. 30 seconds. Okay. So I was going to tell a quick story about Oak North Bank, but maybe I'll leave that for the panel. Does anybody have any questions for the last few minutes? Does anyone want to hear the Oak North story? Real quick, okay. So Oak North Bank was founded, the 2 founders of Oak North Bank were running another business in 2006, a successful business that outsourced investment banking processes and research. And they were going great guns, they had a lot of growth, but they couldn't raise growth capital because they didn't have any property to secure their loan against, even though they had secured contracts from blue chip firms, many of the high street banks would not lend to them. So they said they exited that business in 2014 successfully, sold it to Moody's, but they were so taken by that experience, they said the next thing we're going to do is start a bank. So long story short, they became only the third bank to get a new banking license in 150 years in the UK, raised a lot of money from overseas, 60+ million from India, got Lord Turner on their board, plus the ex-vice chair of Barclays, and ended up growing, were profitable in the first year, ended up growing to £1 billion loan book, £1 billion valuation within 3 years. And the way they did it, last comment, was by taking artificial intelligence and big data, mashing it together, and allowing their lenders, their lending officers, to make better decisions about specific industries they're lending to. So they say, we're going to go and poll all of the industries, let's say if you want to get a loan in the hospitality industry or restaurants. They can serve up, through AI and big data, they can serve up comparator benchmarks. So what should your revenue be in 2 years? You know, are your figures realistic? And it basically makes a loan officer who knows nothing about the sector into an expert. So then they can make it work. So mass customization for SME loans, and that's how they grew their revenue figures.
Which
That's
company is
me.
it?
It's called Oak North Bank.
Oak
Oak North.
North.
Thanks.